Hey everyone, thank you for joining us this afternoon. I have the pleasure of moderating a panel that I'm personally very fascinated about, with lots of lingo, and looking forward to getting into it. Maybe we'll begin with going down the row here. If you guys could introduce yourselves, your companies, and the kinds of assets around the different products that you guys are owning in the crypto space.
Sure. So my name is Matt Hougan. It's good to see all y'all. I'm the CIO at Bitwise Asset Management. We are a crypto asset manager. We manage about $5 billion, $4 billion in the US, and $1 billion now here in Europe through our acquisition of ETC Group. We offer ETFs and private funds and a hedge fund covering a wide array of assets, but are best known for our Bitcoin ETF, BITB.
Adrian?
Hello from my side. My name is Adrian. I'm the head of research at 21 Shares. And we're also a crypto asset manager and an ETF and ETP provider. We're based in Switzerland. We have the world's largest range of crypto ETPs. So we don't only offer Bitcoin and Ethereum, but also a lot of long tail assets from Uniswap to SUI, Immutable X, and so on and so forth. At the moment, we have around 6 billion assets under management. I would say half is in the European market, and the other half is in the US market, where we launched our Bitcoin and Ethereum ETFs in January as well.
Hi, everyone. I'm Elliot Johnson from Evolve ETFs in Canada. We have just over 7 billion in assets. We are not purely a crypto asset manager. We run the range from a whole variety of different asset classes across our platform. But we did launch Spot Bitcoin ETF and Spot Ether ETF back in early 2021. We've been interested in crypto since we started our business 7 years ago. We actually filed in 2017 for a Bitcoin ETF, and it took us 4 years to get the regulators to the point where we could have one in Canada. So we've been in and around the space, and very happy to be here at this conference with all of you.
Good afternoon. My name's Duncan. I run the digital asset.
Duncan?
You told me before. Sorry. My name's Duncan. I run the digital asset business at Aberdeen. We're a full-service TradFi asset manager with about $600 billion under management. Our digital asset business has activities across strategic investments, tokenization, use of blockchain in the business, and we are focused on bringing crypto investment products, ETPs, structured products to our institutional client base.
Thank you very much, guys. Before getting into the whole ETF conversation, it's something I had a question about, and I think a lot of people in the audience would also benefit from. I don't get, what's the difference between an ETF, an ETP, an ETN? Who'd like to take that?
I'm happy to give it a shot. It's a question that we get quite often, especially now since we have the ETFs in the US, while in Europe they are called ETPs. So what's the difference? An ETP is actually a collateralized debt vehicle. However, they're 100% physically backed. Why are they called ETPs in Europe, or specifically in the EU? It's because of UCITS regulation. However, for the end investors, it feels exactly the same in terms of investment.
Oh, thank you.
And maybe also, it's a very complicated. In Switzerland, it's an ETP. In Germany, they would call it more of an ETC. While in the UK, it's titled Exchange Traded Note.
Thank you so much. I'm not sure it's any clearer other than ETPs, but I'll take ETPs and ETFs. Spot BTC ETFs haven't really become a huge tool yet for sort of TradFi and boomer adoption. BlackRock, for example, confirmed the other day that about 80% of IBIT's inflows are from self-directed online accounts. And of course, you know, the great oracle of inflows and outflows, Twitter, keeps showing us that, you know, more recently there's been very little sort of either way. I just want to start with the panel to chat around, you know, why is this sort of slowdown or not expected boom in assets that we're seeing in the ETF space? Maybe start with you, Matt.
Yeah, it's fake news. It's not actually true. So BlackRock is right that 80% of the flows into US ETFs are retail. But if you ignored that and you only looked at the 20% that was coming from institutional investors, it would be the fastest growing ETF adoption rate in history. Over 5,500 ETFs have launched, covering every asset class in the US. None have grown faster with institutions than the Bitcoin ETFs. So the real story is there is massive retail adoption of Bitcoin ETFs, and there is very fast institutional adoption of Bitcoin ETFs. 60% of the world's 25 largest hedge funds own Bitcoin ETFs. Bitwise's services over 10,000 financial advisors who are allocating into the crypto space. The adoption is coming. It's just the reality of crypto is it wants to work on a week-by-week basis. The reality of ETFs is they work on a year-over-year basis. I'll give one more example. The gold ETFs are a great analogy. They were the fastest growing ETFs of all time. They pulled in $3 billion in their first year. Bitcoin ETFs have already done 17 or 18. And the important thing about gold ETFs is the second year they did more than the first year, and the third year they did more than the second year, and they built flows for 8 consecutive years. So don't believe the truth. The reality is these ETFs are being bought by retail, and they're being bought by institutional investors, and we see that at Bitwise every day, and you can actually just see it in the data.
I mean, I couldn't agree more. I think it's just in terms of expectations, especially in crypto, we don't have any patience. So people are just, I mean, it's been 8 months now. Obviously, the institutional adoption is happening and it's coming. We just need a little bit more patience. I would also say, because it's completely right what you say, that is actually those 20% is still a lot. I think it's just overshadowed by the other 80%. And that's why people, they think it's small, but on an absolute basis, it's still happening.
I would just add that 2 things can be true at the same time. On the one hand, Bitcoin ETFs, whether it's this year's launch in the US or 3 years ago in Canada, have broken every record that had ever previously been set. And they are being adopted a lot by institutions as well as retail. But at the same time, most institutions aren't here yet. And I think this is an amazing opportunity for those of us who are already crypto native to realize that we've come a long way. We've had a great year. We're going to have better years in the future. Like, this is just mathematically the case. And there are still barriers to the largest participants coming into the market. The big one is dollar liquidity. If you want to do a $50 billion allocation because that's the smallest unit of allocation you have because you're that big of an institution, if you're looking at Bitcoin, you need the Bitcoin price to go a lot higher for the dollar liquidity to match the size that you're looking to do. And so those folks are still waiting. And then in the meantime, don't underestimate the needs of institutions to go through their processes, which can take a while. Investment committees, where do they put this within their overall strategy? All of that stuff takes time. So I think we need to be very happy about what's happened so far in the past year and very excited about what's coming, because the ETF has unlocked this door. And you know, let's not open our Christmas presents before Christmas. You know, let's enjoy the process while it's unfolding.
Yeah, I mean, I completely agree about that process point. Like, I've spent my career building alternatives products and selling to large institutional investors. And even within institutional investors, it's quite a range, right? Like when we would build new product offerings that were brand new to the market, we'd go to wealth managers first, maybe some family offices, before you get up to the sovereign wealth funds, the big pension funds, the insurers, because their process takes much longer. And if you think about, if I was trying to sell a product into maybe the US or the UK public pension plan market, most of the allocations they make are determined partly by the strategic asset allocations that they have. And they are advised on by consultants and then approved by investment committees and boards. Those strategy level plan strategic asset allocations change every few years. So we actually have a lot of work to do beyond bringing the product to market. We actually have to engage with consultants, educate them, help them understand the benefit of this asset class in a portfolio?
Yeah, I just wanted to, I agree completely with that. And it's a multi-year process. I would add one anecdote for the room. Every year I give a speech to the Barron's Top 100 conference. It's a US conference of the largest wealth managers in the US, so the equivalent of IFAs or brokers over here. And every year I ask the room how many people have allocations in their personal portfolios. And 2 years ago, the answer was about 1% of the room. And a year ago, the answer was 10% of the room. And this year, it was 70% of the room. These are people managing, 10 to $50 billion on behalf of wealthy individuals. And we went from 10% to 70% owning it themselves. They haven't allocated for their clients yet, mostly because they can't. They work at Morgan Stanley or UBS. But allocating personally is the first step. And I'm telling you, it was like night and day. It's a complete difference from a year ago.
What about if you look at the asset allocators at the lower level, I forget the term in the US, but it's, the financial advisors, are they allowed to go out and sell the ETP to dentists and doctors and accountants?
Yeah, so it's sort of a two-tiered system. So there are RIAs, which are the equivalent of IFAs here, and they are out there selling to clients. We have a lot of those clients. I'm sure 21 does as well. The other half of the market are called brokers. They work for firms like UBS and Morgan Stanley. And those brokerage houses need to approve the ETFs independently of the SEC before they can sell them to clients. That hasn't happened yet. Morgan Stanley opened the door a little bit. The other major brokers haven't even opened it. So speaking to what we were talking about, how we're just getting started, 60% of the US wealth market can't even buy these yet. And yet we have $17 billion of inflows. And that's going to change, I would guess, in the next 4 months. And it's just going to continue to open more and more doors.
No, I would just want to say, and that's why it's so important that we educate as well and push from our side, so we get that approval through fund selection. We've seen it in Europe. It's been happening step by step, and I think it's just a matter of time until it happens in the US as well.
Elliot, do you want to say something?
Well, I can just comment on Canada. We now had Bitcoin and ETH ETFs for 3.5 years. And the Canadian wealth management space is dominated by the big banks. Overall, our financial industry is dominated by 6 very large banks. The advisors who work at those banks are not yet allowed to use our ETFs on a discretionary basis for clients. So if they're building a portfolio for clients, they're making all the decisions, they can't use them. They will be able to buy them if it's unsolicited. If the client comes in and says, I need Bitcoin and ETF, they can do it. So that's 3.5 years since we put the products in the market. We still don't have the majority of the advisor community permitted. And then of those advisors who are at independent dealers who could use them, they're not really using them yet. And I would just add that even in Canada, you can't underestimate the impact that the success of the US ETFs has had on the thinking among compliance departments and product approvers within the Canadian market. It's shifted things. It's the SEC saying yes to those ETFs, and managers like Bitwise and obviously BlackRock being so large, having products in the marketplace in the United States opens the door in countries like Canada for more adoption, because this adoption is really a global thing, and we've really gone from 2017, our first effort, people said they can't talk about Bitcoin because there's too much career risk, to 2021, the big institutions and the gatekeepers were saying, well, I have to know about this. There's too much career risk for me not to know about it. And now they're starting incrementally to say, I have to start thinking about how do I use this within my business. But we're not there yet in size. We're there incrementally, and we're moving directionally forward, but there's still a long, long way to go.
I think a question for you, Duncan, related to this as well. I saw some other stats saying that the average sort of entry price into ETFs was around 61K, so a few percent on side finally. But the average ticket size was about 12K, which compared to, say, the gold GL decon ETFs of 60K, and obviously SPYs are way, way larger. Is that telling us anything about what to expect? I mean, is that a reflection of the volatility of the asset, or is it about the early adopters of ETFs? Why is the average size is around 12K?
No idea. I don't know. These guys are going to be better placed to answer that than me. But I mean, those tickets are still small, right? They're not big institutional tickets. I would guess part of it is you've got to think at any of the institutions who's the actual buyer. They're like which part of any investor is making that allocation. Because ETFs are publicly listed, you would have your public markets team is going to be making the allocation. Yet the alternatives team is probably going to be looking at it as an investable asset class. They're going to have bigger tickets. Maybe the actual structure isn't right for them. But maybe I'll defer to one of the guys at the end.
Yeah, I mean, I have a view. Look, there's institutions are two groups, like pensions and then wealth managers. Those get grouped into institutions. The pensions aren't buying these yet, by and large. A few are, but not many. Wealth managers are. Wealth managers manage money for rich people. Someone with $1 million is still relatively rich. If they're making a 1% allocation to crypto, guess what? That's a $10,000 ticket. So I think the reason we're seeing $12,000 tickets is it's mostly retail investors and wealth managers making 1 to 5% initial allocations into crypto. It's honestly not that surprising to me. Like it feels right. Often people allocate 5% to gold. Many people start 1% or 2% Bitcoin. And I think that's just reflected in that ticket size. I suspect it'll go up over time, but I don't find it all that surprising.
And sorry, just one. And then if I think about all the tickets we had into our like hedge fund products, our structured products that we launched, pretty much every institutional investor put test trades in at the beginning. They just wanted to see how it worked, like if it was going to work, whether everything was going to be smooth, and then they ramped up.
Adrian, ETP's been around a lot longer. What have you seen in terms of the kind of typical clip size? I'm just trying to see if there's a precursor to this.
I don't have exact numbers. I would need to check, but I would also assume they definitely still small compared to, I don't know, something like a gold product. And again, it's also because in Europe, in terms of adoption, yes, it's mostly family offices, independent asset managers, high net worth individuals. And if you break down the math, it's exactly where you land at that 10, 15K ticket size.
And as ETFs grow, do you guys have a view as to what that will do for kind of Bitcoin volatility? Crypto volatility is anyway on its lows. Obviously everyone and his dog loves to sell the VIX. What do you see the kind of correlation here between AUM and vol?
I can take a run at that. I think all adoption leads to lower vol in the long term. Just because you've just got that many more decision makers behind the price movements and that many more participants meeting in the secondary market. And I would just to add to that, just something that maybe isn't obvious about ETFs but needs to be appreciated is that ETFs by definition always add liquidity to any asset class that they hold because you have buyers and sellers on a stock exchange exchanging a fund, and that it's only the net amount exchanged that then either is creation of new units of that fund or redemption of units of that fund. And then only when new units of the fund are created or redeemed do you then have the manager going out and buying or selling the underlying asset. And so this is going to mean that you have a liquidity layer of participants meeting that is not directly interacting with the underlying, which also is going to, I think to your question, have a dampening impact on volatility, but an expanding impact on accessibility. And it's why it's so important that we have these kinds of products in the marketplace. I think there's a mistake a lot of completely crypto people make, that they can assume away the existing system and say we all go to digital everything and we're only using digital wallets and we don't have bank accounts and so on. And I think the future is that we're going to blend these two worlds together. And for a lot of people, ETFs is the on-ramp for them, and that liquidity in the secondary market layer is critical. And just looking at my funds, for example, we have probably something like 25 times more volume than flow on a long run basis, which means there's a huge amount of secondary market trading happening that doesn't end up hitting the fund. And it's good for everybody. And actually means that in a lot of cases, you can buy and sell Bitcoin or Ether through an ETF way more efficiently than buying the physical at some of the larger exchanges that have wider spreads for you to actually buy the physical themselves. So it's an efficiency that is passed on to the customer ultimately.
That's a massive misconception. A lot of people don't understand the difference between primary market and secondary market. They see the trading volume on screen and think it gives an indication of liquidity, but that's absolutely right. And I think it's important to understand, especially when you go direct investment versus via an ETF structure.
So yeah, that kind of brings me on to an interesting point. CME listed ETF options last week or the week before. Is it too early? Because if you look at the sort of the crypto markets option or versus traditional markets, forget the ETFs, the volume of options relative to the underlying futures is much lower in crypto than say fixed income or equities, right? Do you think the ETF options the timing is right here for institutional, given where ETFs are as a product?
I mean, I'm really excited to see them launch. I'll say that. For what it's worth, they still need a secondary approval from our second regulator, the CFTC, before they launch. We have a very complex and confusing regulatory setup around options. But if you look at any market, not just crypto, but any traditional market, the scale of the derivatives market is many multiples of the spot market. I think it's like 90 to 1 in most commodities. And so I think this will just abet the financialization of Bitcoin, which will be good for the space. I think it should have happened earlier. I think we'll see liquidity improve and spreads tighten. There's maybe some risk of sort of squeezes if we get very aggressive markets, but that exists in the perps market anyway. So I think it's broadly a net good.
I think it just speaks for the legitimacy of the asset class. And again, options are wonderful because there's such a paradox. Because on one hand, they're used for risk management, but at the same time, they provide leverage. So I think they will just enhance the financial utility for Bitcoin and other assets. And therefore, it will ultimately also drive institutional adoption because obviously it provides them the tools to, for instance, take duration-based allocation bets and play more the long-term horizon.
Yeah, we've had options on our funds since day one. Well, I guess a few weeks after we launched our ETFs. We don't have the same hurdles to get approval for options in Canada. Now, the Canadian options market is extremely small, so don't take this for more than it is. But the options are there. People trade options on crypto ETFs in Canada. It has had no negative effect whatsoever on our products. I think it's just a sign, again, it's a signal to the market that these are legitimate ETFs. These are legitimate asset classes. We're getting all of the infrastructure that you would expect around that. And for a lot of people who want to implement an option strategy for whatever reason, whether it's adding risk or removing risk, why shouldn't those tools exist? There's really no reason not to have them, and I'm excited to see their adoption in the US for sure.
The thing is, I guess then the next thing is, when do the structured products come out on this as well? And with Bitcoin lending and Bitcoin yield in particular, there's some great yield, some great carry that you can add optionality to. So I guess, I'm kind of interested whether anyone's even started asking you guys around these kinds of things.
Yeah, I mean, we've been looking at it for a while. I mean, they already exist. Like, like principal protected solutions, for example. Like, you can do that in many forms. You can do plain vanilla, today, quite attractive zero coupon bond plus crypto asset, or you can do having some sort of yield product in there like money markets plus options. There's a few different ways. I think it's a great way to bring some of the institutional investors into the market. Just where they're not willing to take the full exposure, they want to dip their toes in. I think it's a really good entry point for them.
Yeah, I think everybody is working on it aggressively. The only thing I would add for anyone out there who's enjoying the sort of fat carry trade on Bitcoin. I suspect that that will diminish and go away as more institutional capital feels comfortable entering this market and executing purely on a regulated market with Bitcoin ETFs against Bitcoin options. I think that's going to squeeze down substantially the yields that you've seen on the carry trade historically.
I mean, other than that, I think in general we see more exotic structures in the future. I mean, Matt and Bitwise, they're entering the European market, and we just spoke about it, that we have way more flexibility when it comes to creating exciting products. So obviously something like staking products, or we have one product, for instance, that combines gold and Bitcoin. I know we always, kind of put them against each other, Bitcoin versus gold. We think actually Bitcoin and gold, they together, they perform brilliantly. And other than that, we get this question a lot in terms of structured products. It will come, and many other things as well.
Have you guys seen a borrow market develop here against the ETF holdings?
Sorry again?
Have you seen a borrow market at all? A borrow lend market?
Borrowing, lending? Yeah. No.
Yeah, it depends on which part you're talking about. The Bitcoin ETFs in the US can't lend their own Bitcoin. The Bitcoin ETF holders, there's a little bit, but not, that's sort of what individuals are doing. I don't have a good view on it.
I mean, the lending and everything, it kind of has a bad taste nowadays, especially what happened in the market a couple of years ago. So as of now, I can speak for our products. There's no lending whatsoever involved.
In Canada, you can use a Bitcoin ETF like any other security in a margin account, get loan value against it. So for retail, it provides that utility. But if you try to build a product where you want at an institutional scale to get a loan against Bitcoin collateral, that's still not really there yet, at least from traditional parties like banks and so forth. So I think there's still room to grow before people start to realize that the value of Bitcoin as a collateral asset for doing other things. But I think we're moving in the right direction, and it will be exciting to see some of that happen as bigger participants start to realize the value there.
Cool. I wanted to check around and get a feel around what you guys are seeing between different geographies in the ETF. So maybe Duncan, with you, I think you guys are very strong, obviously, in Europe and Asia. Are you seeing any differences from a client-side perspective?
I mean, definitely in terms of the requests that we get to present, to educate, I would say Asia is definitely leading the way. I mean, we have institutional investors all over the place, but the Asian and kind of large sovereign wealth funds, central banks, I would say they've changed over the last few years. It used to be, come teach us about blockchain. What is blockchain? What is tokenization? And now it's genuinely, how do we invest in crypto? So, over maybe 2 years, the attitude has changed. Not quite seen that in the UK. We've had a few RFIs from consultants, but I expect it to come. The spot Bitcoin ETFs in the US created massive buzz in the UK. Like, even though ETPs have been in Europe for years, all of the execution-only brokers, like the BTC businesses, were getting massive inbound requests from clients wanting to get exposure to it. Now, unfortunately, they can't, because in the UK, retail can't buy the ETFs or the ETPs. But that's changed the way these brokers think. They realize there's an opportunity. They'll probably all implement the professional investor opt-in option, which they don't do today. And I think these are people who work partly at the institutional investors as well. So the attitudes will just slowly change.
Yeah, look, I would like to have Swiss regulators and US market size and pick the best things from every region in the world. That would be ideal. Obviously, we all live with our own constraints and think the grass is greener somewhere else. I would say that the thing that I'm taking away from this conference is just how truly global this community really is. And I think that's super important because the direction of travel seems to be consistent everywhere. We're moving towards further adoption. We're moving towards better education. Every single thing that any of us does on social media to help to spread the message is being consumed outside of their country, across borders with other people. And that's all helping, and it's helping investors, it's helping advisors, it's helping regulators all move forward. And we obviously have made different headway depending on the products we can build or the crypto assets that we can put in them. But I do think we'll see a future, maybe it's 5 years out, where many more countries have kind of caught up, and we're maybe more at a level stable playing field rather than the big inconsistencies that have happened over the past few years in terms of what's possible in different places.
Thanks. Adrian, I think you're the only one here who has UAE exposure, where M2 comes from. And what are you seeing there on the ETF front?
Not much happening. There's not much volume. We have a listing in Dubai as well, but in terms of volume, it's not really big in Dubai. I mean, it's just looking in terms of where the flows are coming from. In EMEA, it's definitely, I would say, Germany and Switzerland and Italy to a certain extent. Those are kind of like the key markets. Yeah.
Cool. Matt, question for you. Maybe you can kick this off. I've been curious about the ETH ETFs. Why, at least in my sense, it sounds very superficially, very, very mediocre. Why do you, compared to the Bitcoin, why do you think that was or is?
Yeah, I think they're, one, just to push back against it a little bit, the challenge with ETH ETFs in the US is you had all these assets locked up in the grayscale product, and they fled it as soon as it converted, and that's overwhelmed what are otherwise very healthy flows. We've had, I think, 300 million or something into our ETH ETF. That would usually make it a massive smashing success. And so I think they've been more successful than people give them credit for. But the big issue is they came too soon. They would have raised 5 times more assets if we had waited another year. It takes people a long time to digest Bitcoin and be ready for the next thing. I would guess the majority of this room, the first asset they bought was Bitcoin. And then I would bet at some number of months later, they bought another crypto asset. That's not true for everyone, but that's like the most normal pathway. And I just think the market wasn't ready to digest Ethereum. It's a more complex message. They were still getting their hands around Bitcoin, but it'll happen. You will wake up a year from now and there'll be $20 billion in the Ethereum ETFs in the US. And everyone will be like, wow, I thought they were a bust. No, they weren't a bust. These ETFs just take a while, and I actually think they're doing all right.
I think it comes with education. I mean, we are talking to a lot of traditional investors, and we still have to explain, first of all, what Bitcoin is, and then the difference between Bitcoin and Ethereum, and why they are so different. And obviously, the narrative for Bitcoin is pretty straightforward, while with Ethereum, there's a lot to unpack. There's a lot of different narratives, which, in my opinion, is a curse and a blessing, because you have a buffet of optionalities on how you could pitch that product. So I think it will just take a bit more education, more time, until also traditional and institutional investors pick up on this investment opportunity. However, one thing that I would add, I think pitching it also depends. We get a lot of the time the question on where should we put it in terms of portfolio allocation. So you could argue that Bitcoin is more of a commodity, so it might be sitting between alternatives next to gold, while Ethereum could be considered more of a tech play, even if it's a decentralized tech play, but you could make the pitch that it should sit next to, tech equities, just to be part of this Web3 revolution.
Yeah, I agree with all that. I forgot one more thing that I think's been hurting ETH ETFs. It's been a terrible period for Ethereum. I mean, we shouldn't look past that, right? Like, it's not the rock that Bitcoin is, and it's not the cool kid like Solana, Near, Monad, etc. It's like the middle child that everyone forgets about. It's just been missing from the narrative. And if you can't sell ETH to crypto degens, you're going to have a hard time selling it to institutional investors. It's the same sort of narrative gap. I think that will end, by the way. I think the market is coming back around to Ethereum, but I think that's hurt it as well.
I thought Vitalik sang well in Japanese.
He's saying well, yeah.
Yeah. So I know you guys said you can't lend your underlying Bitcoin out, or maybe that's a geographical difference. Can you stake your ETH and pass that yield on to your ETF holders somehow?
We stake our ETH in our European ETFs. In the US, you can't.
Yes, likewise. Again, we have a lot of different products in Europe where we provide staking yield to the end investors, yes. But again, as we mentioned, it's really important that we manage the liquidity to make sure we give the best possible yield to the end investors.
Yeah, staking's possible in Canada. There is one fund doing it, but the liquidity management has kind of prevented a bunch of others from doing it. And just on that, I mean, one philosophy behind it, I think that kind of comes back to the point of why are ETH ETFs not selling. I'm skeptical of Bitcoin and ETH as a yield opportunity first and foremost. I think people are coming for the price return, the technology, and the newness of the asset class. And I think right now that's still the primary selling feature of ETH. Even, I mean, if you're getting staked yield, that's great, but I don't think you're going to get people buying it for the yield if they don't want it for the ETH itself. And so we still think there's room to go on all of this to get to the point where people then say, okay, I'm so comfortable with the asset. Now I want to get one that's got yield because I'm in this thing for the long haul, and therefore I want the yield on it because I'm going to go 10-year hold and I want to pick up some.
I actually think they will come because of the yield, right? Because once traditional investors understand there's a yield generating asset, they get excited. Of course, Bitcoin has a different value proposition, but it doesn't generate any yield. And I think once they understand that with ETH, it will drive some adoption as well.
And I think if you've bought into it as a technology player and you really understand what you're doing, with the contribution you're making in some way to the technology operating, you'll be more inclined to want to do it, right?
I mean, with ETH upgrades coming along the way, I mean, does that make it more confusing for the institutional ETF holder, or is it more encouraging? And I can't tell. Like, ETP, blah, 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 and then you have to like put a note out, start explaining this to people, and...
Yeah, I think anytime you need to go into technical detail, you lose a lot of people in the room. And so this again comes back to why is Bitcoin, so predominant, because you can tell the Bitcoin story in under 5 minutes, and then people are either, yes, digital gold, I've got it, I'm allocating, or they're not. But I think it's a challenge, and I think actually refining that narrative, explaining that narrative, making it very simple to understand is a challenge for ETH. It's a challenge for crypto generally beyond ETH as well, and something that we all need to be focused on and thinking about as we try to get the audience to increase in size.
We've got I'm running, give me 30 seconds. What my second most curious question, outside of what are ETPs, was around this story around Coinbase and BlackRock. And I was wondering whether, the official line from Coinbase or BlackRock was around settlement times and fees. And I was just wondering whether there was something more nefarious going on. Why something that could be settled on chain and publicly wasn't done so in real time?
Always great to talk bad about BlackRock. That never comes back to haunt you. Look, BlackRock's an exceptional. I wish I could say something. They're an exceptional ETF manager. They're buying and holding Bitcoin. I don't think they buy it and secure it as efficiently as both 21 does and Bitwise do. We have very similar approaches to trading and custodying, and it is more efficient and creates a good product. But has BlackRock just been pocketing, billions of dollars? Definitely not. They're buying Bitcoin as well, just less efficiently and less expertly.
I also think the rumors are not true. Of course, there were the rumors around paper Bitcoin and so on, but no, it's not happening.
They worried about gold too. This is a classic worry. They definitely have the Bitcoin.
Cool. Thank you very much for your time, gents. This has been fun.
Thank you.
Thank
Thanks.
you.